bad news for many European citizens living in Europe. So what are we seeing currently? We are currently seeing that tax conditions are getting worse and worse in some European countries. And we reported on this recently. So the UK government has identified a £22 billion black hole in the budget. And how do you want to fill this black hole? Correct, by cutting taxes. Measure number one, the non-dom status, which brings massive tax advantages for non-citizens, is to be abolished from 2025. In addition, an exit tax is now being considered. So this exit tax already exists in other peer countries, for example. So what does this mean? This would mean that you would have to pay tax on unrealized capital gains, such as company shares, when you become a non-resident of the UK. So in such a case, the tax authority would then assume a fictitious sale of the company shares, and even if you have a manageable annual profit, a larger capital gain will quickly materialize, and you would then have to pay taxes on this fictitious capital gain. Essentially, this would ultimately make it much more difficult to leave the UK and move to another destination. And it is not only the UK that we are seeing tightening, so we are seeing similar developments in France. We also reported on this in one of the recent videos. So the new finance minister has said that there will be tax hikes that will primarily affect the country's wealthy people in particular. There is also talk of a universal tax. This means that even if you emigrate and become a non-resident of France, you would still have to pay taxes in France. So let's assume you emigrate to Dubai, for example. Here you pay no taxes on crypto gains. So if you now sell with high profits in a bull run, for example, you would still have to pay tax on the profits in France if the taxes in your new country of residence are at least 50% lower than in France. And obviously in Dubai, as said, the capital gains tax is 0%. So in this case, you would pay taxes in France. And the latest example is now Germany. Germany already has an exit tax similar to the one being considered in the UK. So anyone who has held at least 1% of a corporation must pay an exit tax on a notional capital gain. The crazy part, however, is that the exit tax has now been tightened, so even private assets are to be affected from 2025. So if you have invested at least 500,000 euro in a single fund or an ETF, you will also pay tax, so exit tax, on unrealized capital gains in the future. So in other words, it's becoming increasingly difficult to emigrate from Germany if you are an entrepreneur or an investor. So what do the current events in Europe show us when it comes to taxes? Well, there is a clear trend towards more and more different and higher taxes, and that states want to make it more difficult, of course, to emigrate and relocate to more attractive tax destinations such as Dubai, for example. And it feels like everything is happening all over the world at the moment, so sometimes you don't even notice when there are major tax changes in a country. So now more than ever it is important to act. So if you are an entrepreneur or investor and have been thinking about improving your tax situation, perhaps emigrating to another country and leaving the current tax system in your home country, if you have been toying with the idea of acquiring additional residencies or citizenships, now is definitely the best time to act. So obviously, the longer you wait, the higher the risk that at some point you will no longer have the opportunity to get out of the current system you are in, or at least with a lot of obstacles. And that's exactly what I want to pass on to you today. One simple sentence: the best time to act is always today. I hope you enjoyed the video. If you enjoyed it, please give it a thumbs up, subscribe to our channel. See you in the next one.